How you doing, guys? We're going to go to some projects that myself and Adam have done over the last year or so. We're also going to go and show you some deals that we've sourced for clients, some that we take on market, some we take off market, all round about the Paisley area. So it should be some really good content, so let's go and have a look at them all.
So just now we're on to two deals that we had sourced on for investors that are above the Renfrew Post Office. One of them tenanted, one of them vacant. We sold them straight on to our investors. Great cash flow, great yields, two good ones. So we'll show you them next.
So we're outside two flats in Renfrew Main Street above the post office for clients that we sourced deals for in 2025.
So both of these properties that we sourced were above Renfrew's post office. A one-bedroom tenanted property, purchase price 50k, 550 rent, a great 13% yield. The other one was a vacant two-bedroom flat. It was 75k purchase price, 750 rent, a massive 12% yield again.
So this is us outside the phone booth house. It's Bargarin Drive in Paisley. When we came across this one, it was knee-high in rubbish and phones. There's well over 100 phones that came out of this property, and it was a cracking project, a cracking refurb. We bought it for £22,000, including legals. We spent just over £30,000, I think it's about £31,500, £32,000 on the refurb. At the time that we were renovating this, we expected an end value of £85,000. Now luckily, during the renovation, a wee tip, always just check the prices, the sale prices in the area, because one had sold in the block at 100, 105, 110? £110,000, so that really boosted our end value. We ended up getting an end value on it of 105,000 and sold for £128,800. So we made close to £75,000 profit on this one. And it's really interesting how we actually sourced it as well, which Adam's going to tell you here.
So this was another one that we had got from the Empty Home Scheme in Paisley. They sent an email out to about 100, 200 people, maybe thousands, who knows. They sent it out to everyone. I had reached out to them saying what we can do for this seller and what we would like to achieve here. Spoke with the seller, he gave me a key, I went and looked at the property. I just knew that this was going to need a lot of work. We made him an offer, he was more than happy with it as he was clearing all his debts. We got the completion in around about 3 weeks, and then we got started on the refurb. Have a little look at the before and afters, it really is a great one, and then on to the next. So there we've just went out to phone booth, the flip that we done last year. Two properties above Renfrew Post Office that we sourced for clients directly. Both, in my opinion, actually really good deals. One 55k purchase price, 50k purchase price, 550 rent, 13% yield. Another 75k purchase price, 750 rent, 12% yield. That one was actually when Walker Laird fell through. Seller reached out directly, it was a seller's friend. These are the kind of deals that we can get. We're selling them on to investors, but I feel like a lot of investors are not going to not get back.
A lot of investors turn their nose up to these sort of deals. I mean, we've got a good investor yesterday on board that's buying basically just for yield, which is, they're few and far between now, I feel. And they're obviously really good deals, but they do suit a particular type of investor. You know what we're like? You want to just try and get as much money out of deals as possible, as quickly as possible, which is fine. That's a very particular way of investing that most people that we work with prefer. But these sort of deals where you can just put some money in, whether it be on straight to a product, a buy-to-let product, or cash buying and just get the yield, even just getting a handful of them could be a difference where you're leaving your job or whatever, you know what I mean?
So I'm onboarding clients all the time, doing calls, and the criteria is more firm and more strict than ours, probably. You're speaking to them, they're like, if I'm paying a fee, I'm looking to have all money back in like 12 months, 16 months. I only want to leave 10k in a deal, 15k in a deal. We are probably looking at stuff now going, I'm happy to leave it in for 2 years.
100%. The last one I took, I think I'm leaving it in for about just under 3 years or something.
Aye, exactly. And obviously a lot of people are now getting refinances and they're quite strong and everything else. I feel like people are just looking at it on paper and go, that doesn't suit me. Instead of going, no, that is actually a good deal.
Exactly.
It's in Hillington. Like one that we just sold the other day, it's in Hillington.
Good stock.
Aye, good stock. In Hillington, 3-bedroom flat, £400 a month cash flow. Great area. It probably leaves a little bit of money in. A lot of people are turning their nose up to that.
What they're looking for is the high cash flow, all your money out, and as quick as possible. And sometimes you just need to, like for me, if I'm getting all my money out within like sort of 2-3 years, but my cash flow is like £400-500 a month, that's ticking the boxes for me. Whereas a lot of people are wanting other money out, plus the cash flow, plus, you know, money in their pocket and stuff like that, and they're just so difficult to find now. And I feel like that's where investors probably need to realise, especially if you're relying on sourcing companies, sourcers, ourselves, anybody really, you need to be aware that these sort of deals will be few and far between, and maybe just look at expectations a wee bit potentially.
The unicorn deals are always found by yourself.
Yeah.
They're through a family member, somebody you've spoke to on Facebook, a Facebook group, somebody's seen your content and reached out to you going, by the way, I've got a property I want to sell, and it works out like an absolute belter. Because if that comes through, you know, someone's marketing, they're going to find a way to take it for themselves. You know, those properties that are getting all money out plus 10k and that, because this is an industry where everyone's so driven, wanting to do well, wanting to make money. So they're not just going to pass that on for a 3k fee. So when we're finding deals...
Oh my God, I'm back in the early days.
So
the amount of deals that I actually sold to investors in the early days like that is ridiculous. And by the way, see, back then, I knew that these are ones that I would not so much regret not taking, because at the time I was just so driven on cash flow and not going back offshore and getting full-time in property. But ones that I knew I should really be taking them myself, flips and stuff like that.
Aye. So what I think, if I'm speaking to a client and I send them a deal and they're leaving, say, 20k in a property, they're getting £400 a month cash flow, they're getting the money back in, say, around about 2 years, 2.5 years, 3 years, I still think that's a good deal. I'm not just saying that I want you to buy them, because they don't even come around all the time. So if you do get an opportunity like that and it's in a good area, you should be thinking, I'm happy to open my criteria up a little bit from the leaving 10k in and 15k in, because you're getting good stock, a good area, capital appreciation, you're able to leave a little bit more money next, you know later on it's going to come back. You should probably think about it and go, you know what, I'm actually happy to put a bit of money in there, just like, you know, what I'm doing, Dave is doing, a lot of people in the industry are doing at the moment.
I feel like you just need to get your money out to work, to be honest, a lot of the time as well. A lot of people are sitting there with 50, 100, 200 grand, and are still sitting there 6 months later because they're just not pulling the trigger on anything, because they're waiting on, maybe not so much of the unicorns, but the, you know, really amazing deals. It's maybe only leaving 5 grand in the deal or something like that. I'm just a big believer of getting your money out to work. If the deal ticks most of your boxes, get it out and get it making you money. You're going to tie a wee bit up, but recycle as much as you can. There's some really amazing refinance lending products as well. Emma Ross has just told me about a new lender that's come into Scotland, and the rates that I've got for Carna Drive in Kings Park, 4.99%. There's a bit of a, I think there's a £17.50 fee on it, but under 5% on a refinance is incredible now. It's the best I've seen in years. So there's some really good products there as well, where you are going to be able to refinance 85% as well. She gave me a product with 85%, the fees only that great. And you know, pulling out as much money as you can, if that's sort of what you're looking to do. Get the cash flow, pull the money out, go again, keep recycling it as much as possible. You're going to leave some money in, but you know, just keep going again, Anything you're buying now, you're not going to see any benefit from it just now probably. It's going to be the 2 years, 3 years, 4 years, when all the hard work you're doing just now, you'll get a bit of cash flow, but then you've built up that equity, got a wee bit of capital appreciation, you're probably able to refinance later on down the line. I think that's one of the issues, that everybody just wants it now, don't they?
Everybody wants it now. Everybody wants all the capital appreciation now, all the cash flow now, and everything else.
We want it, everybody wants it, but the reality is you can't get that. Nobody can get the deals consistently, and then anybody that tells you they can, by the way, is lying. Even the bigger companies that are maybe spending 50 grand, 100 grand a month, and they're getting you into their big massive programs and stuff like that. If you want to go and invest in, you know, Aberdeen, Campbelltown, all over the place, then maybe, but you know, think about your exit with stuff like that as well. If you're wanting good assets, good stock in good areas, you're just not getting that level of deal flow, the sort of unicorns as we talk about. But I think the point is, just get your money out to work. Don't just leave it sitting there. Don't look at, you know, I need to get every single penny back out. You're going to leave money in. Just have a bit of a plan, have a bit of an exit. You're going to get the cash flow as well, remember. Plus all the credibility, all the social content that goes with that is when you start investing, you start buying. People can start seeing what you're doing. That's going to attract investors and stuff like that to you. That just gets overlooked as well, I feel. Especially with people that are just starting out. Try and get something under your belt. If it's a flip that's only going to get you 10 grand profit or whatever, try and just get something going at your first buy to let, because what can come off the back of that can be so much more.
What I'm seeing just now, Len, obviously we spoke a wee bit about deals there, but what have we actually got going on just now? Like, I think you've been doing quite a few of your own things, haven't you? You've got like kind of Karma Drive, that's been on the market, that's sticking a wee bit, but you think about maybe going for an SA?
Aye, so that one's shocked me, to be honest. And I don't even think I priced it too high. I think it was pretty fair, but it's, for whatever reason, it's just nobody's really biting at the price that I need. So the plan now is to go to Refinance, SA, Commonwealth Games coming up. We should do really well out it and still get my money out relatively quickly. Buy to let, I probably wouldn't get my money out that quick, but SA is, you know, 3-4 times what you're going to be making, maybe sometimes a little bit more in Glasgow. So that's going to, I think that's going to need to be the plan, unfortunately, which is the first time I've ever had to do that, to be honest, so it's kind of opened my eyes. But I did say that as well. Knightswood assisted sale that I done, Toll Cross flip that I done with Alex Anderson, there just wasn't as much demand as I anticipated, so I just don't know if the market's maybe changing a little bit, but I've been working on that a lot in the background.
Why not it goes back to an all, mate, see the price point what you're playing at?
Aye, definitely.
Think about the free like we done last year, 22k, sold at 130 with 100k home report, amazing price point, around about 100k, first time buyers, everything, all in there, throwing our money at it. The other one that we done in Paisley, I think 32k purchase price, we sold at 15k over the home report with 100k home report. And then we done the Kirkcaldy one, and again it was around about 100k also, and we still managed to kind of get a decent result out of it. Around about that 100k, like Karma's at 200k, you're in a different kind of price point there.
Aye.
So
it's attracting so many buyers, investors still, downsizers, first time buyers, you're just hitting everybody. So it's a different animal when you get a property with an end value around your sort of 80 to 120, I would say. But not so much anything above that struggling. Kirkton, Knightswood was 150 I think, and that still kind of struggled just a wee bit. But you know, it could just be a sign of the market, a sign of the times, and maybe what's to come. But I definitely think the ones are the golden nuggets, aren't they? The golden gooses. I'm
actually a wee bit worried now with the market for some reason. I don't know why, I've just got this weird inclination that something's going to go wrong. And know that I'm some expert that's been in the industry for years, but I just feel as if there's something going to go on. It's like me and my partner are looking for our own property now, and I noticed that the one we went and seen last night, the guy bought the property for £270,000 in 2007, and then the market crashed in 2008. He then sold at 170, and now it's valued at 265 again. So it's back to the point of where it was at in 2007. I don't know if that's anything to go off of, but that we must now be back to the peak of the market.
Yeah. Right.
That this is this the highest the prices are going to go?
A few people say that same thing, by the way.
So it's like now I'm worried, am I going to buy a property and then something happens and I'm going to be the guy who sold it 7 years later for like 100 grand less?
Then what do you do? Do you just no buy?
Different. I know. That was quite a good day. Obviously a wee bit of chat there on kind of deals, what's going on, that expert analysis on the market, and also a few bits and bobs. So
hope you enjoyed it.
Hope you enjoyed it, team. Cheers.